Let's hit some movers here. Boeing making a surprise turnaround as well midday. Stock was selling off earlier after a disappointing quarter. Strength, though, in deliveries and its first annual positive cash flow since 2018, perhaps offsetting an unexpected quarterly loss and a revenue miss tied to supply chain issues. Boeing CEO David Calhoun telling CNBC earlier he predicts a choppy year.
I have confidence that we'll get through this year. It'll be a bumpy year for sure. All the other major tier one guys in our world are on the same page. Transparent discussion about what's required, what's going to be needed to hit the next rates, et cetera.
RBC Managing Director Ken Herbert joins us now. He's got an outperform rating on Boeing, $225 price target. Ken, was this a good quarter or not?
Yeah, I mean, the quarter in and of itself was mixed, I would say. I mean, obviously, they hit their free cash guidance for the quarter, which was good. They didn't change their full year 2023 outlook, which they'd initially provided last November at their Capital Markets Day. And that's a fairly robust outlook, so that was incrementally positive. I mean, there were some cautious comments around supply chain and some of the execution issues, but until we get negative data points on there, at the high level, you've got a reopening in China. You've got a public, in our view, that wants to travel again. You've got a supply chain that seems to be getting better, and I think that's all incrementally positive for the stock here.
So where are we on execution issues, particularly surrounding, Ken, the delivery of 737 MAX and the 787? Because that's been the focus for investors, right, in the past few years, and a big overhang.
Oh, certainly. You're exactly right. I mean, those are the two key programs where Boeing has had a number of issues. I mean, we've had 4 issues of significant supply chain headwinds and execution issues here. So, and those are the 2 most important programs if you think about the cash profile for Boeing over the next several years. You know, Boeing's guided to 400 to 450 MAX deliveries this year. It sounds like they're still struggling to stabilize at 31 a month. We think a lot of suppliers are still struggling to maintain these rates. But at a baseline, if they can maintain that production level, I think that's incrementally positive. And the 787, they've guided to 70 to 80 deliveries this year. Again, a program that's had a lot of manufacturing issues over the last 18 months, which appear to be getting better on the back of some good deliveries in the fourth quarter and into a strengthening wide-body marketplace. So, you know, I'm not going to. It's probably too early to say that we've completely come out of the woods in terms of the supply chain and the issues there. The recent data points, though, have been encouraging.
I can't tell how bullish you are from your tone and from your price target, frankly, at 225. It's not that far from where we are now.
Well, it's a fair point. I mean, keep in mind the stock's, you know, been up 40% in the last 6 months, you know, 12% so far this year, give or take. I think the stock could have a period of consolidation here while the earnings and confidence grow into, you know, what has been a pretty strong move in the stock. But this is a stock, as you think about some of the tailwinds in terms of China, and we talked about on the travel recovery and an improving execution story. And again, if there's a sentiment around sort of risk on and less economic headwinds, this is a stock that I think investors want to own and should continue to work through the remainder of this year. Again, assuming the execution story really holds up.